It's okay to be your own person and don't live other people's lives. Live your own life and decide what you want to get out of it. And you will feel a lot better having failed and tried. It'll be a lot better to tell someone when you're 50, I tried that.
Right.
Here's what I learned. You know what I mean? Rather than, I could have tried that. Maybe it would have worked, right?
Hi, everybody, and welcome to the Smarter Money Show. My name is Vlad Sherbatov, and today we have a special guest, as always. He's a longtime writer, entrepreneur, and a finance industry expert. He's the founder and chief editor in the wildly popular publication called deBanked, which covers the world of non-bank finance. He's a very respected voice among lenders and funders in North America, and just an all-around nice guy. Please welcome Sean Murray.
Thank you, Vlad. Appreciate that nice introduction.
Sean, you weren't always this big fintech entrepreneur, publisher, influencer, business type of guy. Can you share your origin story with us?
Sure, yeah. So I got into the industry. I worked in fintech myself before it was even known as fintech. I got started in about 2006, shortly after I graduated college. And I was working for a startup company that was, we didn't even know what to call it. We were buying future credit card receivables of like restaurants and retail stores, essentially giving them access to capital when banks couldn't lend them money, and doing it in a unique, innovative way. I started there as an underwriter. The company grew like exponentially. I worked my way up to running the entire underwriting department. And I did that for about 2 years. And then I moved over to the sales side of it, and then started brokering these transactions. And I did that for about 2 years as well. So I have about 4.5 years of working in the business under my belt. I got to see both sides of it, the risk side and the sales side. And I learned so much from doing both. And I was always, I was one of those people who would go online and I would try to learn more, right? I would look for the blogs, I wanted to go to the publications and see what other people were doing. And there just wasn't any of that stuff out there. And I thought, well, it's kind of a bummer. Like, I feel like this is like a story to be told. And so I started a blog, and while I worked in the field, I started writing about sort of my everyday experience, the things that I encountered, the problems, the ups and the downs and all that.
So was writing a passion of yours before you got into that industry?
It was. So I went to school for accounting and finance. I was a double major in accounting and finance. And at some point I came home from college and I told my parents, you know what? I don't really like accounting too much. I think I'm going to go into journalism instead. And they're like, no. No, don't do that. Don't tell us that. Stick with what you got, get the degrees, and then you can figure it out for yourself afterwards. And of course, I did that, and I went into finance, obviously, as I just mentioned. But I always had the love of writing, and when I started blogging about my experience in it, that passion just came back, and I felt telling the story of what I was doing was more fun than doing the finance work itself. So that's kind of my background in writing.
And how did you know if people were reading it? I mean, were people instantly engaged with the stuff you were putting out there?
So interestingly enough, they were. The industry was very, very small. We're talking at this point, it's like 2010. So this is 11 years ago, right? I think when people hear fintech, we're talking about the last 4, 5, 6 years, right? But this is over a decade ago. And from the very beginning, obviously, I wanted to get that feedback. If you write something, part of the joy of a writer is people liking it, right? Or enjoying it, sharing it, or telling you what they didn't like, is getting that feedback. You don't want to just write and nobody reads it. So I did have analytics software from the very beginning. And because I was one of the very few people, if not the only person writing about these subjects, I got a lot of clicks from Google. And I could see in the analytics that people were reading it. And then that was reinforced when I would go out to happy hour. I live in New York, right? So I would go out to happy hours in New York, and I would mingle with other people from the business that I was in. And they would say that they read, some of the stuff I put out there, and they liked it, didn't like it, or it prompted a discussion. So people were reading it from the very beginning.
So, and this is 2010. So blogs were also more popular, I think, back then, just by virtue of there not being as many media outlets as there are now, for example. Because if you fast forward over the past 10 years, as you've grown deBanked, what started as maybe a blog and a writing style publication, you've over the years added elements to it, right? You've added a magazine for print distribution. You've added email for email newsletters. You've started doing events throughout North America that became extremely popular. You've also added your own TV channel and started producing videos. So you've expanded sort of that range. How did you come about these decisions that resulted in the evolution of deBanked over the past 10 years?
That's a good question. I'm not one of those people who said, I really want to be an entrepreneur and I'm going to start a business someday. I just don't know what it is. For me, it was more about filling a void, something that should have existed that didn't exist that I thought I could do. And in the beginning, it was just about content that was related to an industry that was lacking in information. You could go online and you could find financial products. You could get a loan, you could search for a loan. But if you wanted to learn the ins and outs of how the business worked, if you wanted to become a lender, if you wanted to become a funder, if you wanted to become a facilitator of these things, there was no information. So I was putting it out there. And because so many people were reading it, it attracted somebody who wanted to advertise on it. They said, our customers are reading it or our partners are reading it. And we'd kind of like to show, that we're, the big in the industry. And they're like, can we get our name on your blog? And I said, sure. I don't see why not. So we worked something out. They got a banner ad on the site. We came up with a price. We got them on there. And that started the flow. We had a few more do the same thing. I see this company on there. I see this company on there. Can I be on there as well? And it started to create a lot of work because I was still working in the business at the time. I was still selling business loans and factoring products and cash advance products and all that stuff. But on the side, I had to deal with I had customers who were like, you need to do more content. You need more content, all that other stuff. And I said, okay, well, I really got to get my name out there. And how else do I do that? And so one way of doing that was to go to industry events. Turns out there were no events. So I would have to go to kind of related ones. So I would have to go to payments shows. So payments has been around for a long time, right? Payments is a big industry. And there's been a lot of innovation in that world for a while. But the business itself has been around for a long, long time. So I would go to payments trade shows. And at first I would just tell people, you should go to my blog. Here's my business card, right?
Right.
And I would do that for the whole show. And I would go back and I would look at my analytics and I'm like, oh man, I'm going to have all these viewers. And I didn't have any. I had viewers, but it didn't increase as a result of going to the show and handing out my business card. And I said, what went wrong? And what I didn't realize was that people are going to these shows and they're getting a ton of business cards. They're getting a ton of swag. And I just got lost in the shuffle. I mean, telling someone to go to your blog at a trade show, not really a surefire way to get visitors to your site.
Right.
So I said, okay, well, what's my product? My product is a magazine, right? Or it's news, right? Maybe I should just give them this product physically give them the content. And then if they enjoy it, then they'll come to the site, right? So it's like, if I give them the content, they'll come rather than telling them to go to the site to get the content. And so I literally printed magazines. I didn't know how to do this, but I called up a printing press and said, turn my blog into a magazine. They were very helpful. And, lo and behold, I had this actual magazine, and the next trade show I went to, I just started handing them out to everybody for free.
Right.
Cost a lot of money to do, but guess what? People read it on the plane ride back, or they read it on the train ride back.
Sure. And
all of a sudden it brought in a lot of visitors. And that kind of created the impetus for it being like a real business. Right? It attracted more advertising. It created a demand for more content. And although I like to write, I am very business minded. I do have that business background. I did work in the field for a few years, And I did have those degrees. And I thought to myself, I think this could be its own company. This doesn't have to be a blog. This is a business.
Mhm.
There's no, I went to a payment show, but I should be going to a lending show. There is none, right? There should be information online about this industry. There is none. That's going to be me. There's trade magazines for everything, not this. I'm going to make that. I know how to make a magazine now. And a lot of it was learning along the way. So, I went from blogging to making a magazine. How does one do that? Honestly, you just figure it out, right? You start calling around. And it's the same for everything that we've done along the way. You mentioned that we expanded to events. Well, how do you go from that to events? I'm not an event planner. I've never planned an event. I couldn't even plan my own wedding. I had my wife did it. My wife did it, and we had a wedding planner. I was put in charge of a DJ, and I failed at that, right? So, but yet I'm hosting these massive events. So how did that happen? Well, you need to find the people that know how to do it, and you need to know how to market it. And so you kind of do it in increments. We started off by just doing small things. We did a golf outing, we did a happy hour. Got our feet wet, and then we worked up a way to doing shows. And so that's kind of the evolution of how we got to where we are. You mentioned that we're doing videos and stuff now. It's the same thing, right? If you know that there's a need for something that's not being filled, I think about ways to fill that void. If you're an entrepreneur, you just figure it out. And a lot of times I'm not going to be the one who knows how to do it personally, or I know enough to find the person that knows how to do it. So that's how we got to where we are now.
So you were in the business, and what started as a side hustle essentially grew into a bigger business as you kept stumbling upon these gaps that were in the marketplace. So did you have to have did you have a moment, I suppose, with yourself where you had to have that mindset shift of, all right, this is going to go from a side hustle into a business. And that means that if I'm going to grow and evolve the business, I also need to grow and evolve myself in different ways and how I look at it, because now I'm not going to be just, writing, but I have to learn how to best manage these clients that want advertising, how to handle their bookkeeping, how to attract the right talent so they can help me bring new ideas and execute things like events and magazines and whatnot. Talk about that internal process of if you had to change your mindset during that journey.
Yeah. So I like to read a lot of books. I like to read a lot of entrepreneurial books. And it turns out that I could relate to a lot of the entrepreneurs in the books, because at that point I was working in the sales side of the business, and it was commission driven. So I was already in the mindset of I earn what I put into it, right? And when you work on commission, it doesn't always work out the way that you want. You could work really, really hard and still not get the monetary reward for it. But if you're entrepreneurial minded, it just creates, you kind of create the next challenge for yourself. Well, tomorrow I'm going to, right? Whatever I didn't do this time, I'm going to do next time. And so I related to the characters. These are not imaginary characters, but real entrepreneurs in the stories that I read. And I thought to myself, I could be like that, right? Unfortunately, I don't know that I have all the tools and resources to just jump from one thing to the next. I think people who start a side hustle, they're all caught up in, they need to wait into their business. Their side hustle is 100% ready to supplement their income that they're about to give up. People say, well, I can't give up my job until my side business makes 100% of what I make at my job. And until then, it's just going to remain a side hustle. I think, unfortunately, if you have that mindset, your side hustle is probably never going to become your main thing. It's really, really hard to get a side hustle to the point where it can replace your job. And at the same time, looking at your side hustle as a salary is also kind of an impediment to really growing it. Because if you're looking at it as, I need this to pay my rent, well, then how is it going to become this big thing if it's just like this tool to pay your rent? And so for me, it was about, I think I need to cut the cord entirely. And I did this right after I got married. So it wasn't the best time to do it. But I was still in my 20s. I didn't have any kids yet. And I thought to myself, it's now or never. I didn't want to wait 20 years and have all this regret. So I said, I'm going to quit my job. Just like that. I'm not going to wait till my side hustle gets big. So I told the company I work for, I'm out. And they're like, what? What are you going to do? And they knew I had this side hustle. It wasn't like this big secret, right? And they were supportive of it as long as it didn't interfere with my day-to-day job. Mm-hmm. But I told them, I didn't have anything else lined up. I was just going to do that. And it wasn't enough to replace the income that I had. And they knew it. And they thought I was crazy. And of course, my wife thought we just got married. And she's like, what are you doing, right? I'm like, please let me try this, right? It's just this once. And I quickly realized after I had done that, I quit my job. I promised myself I'm not going to just get another job. I'm going to see this to the end, even if it fails. And one thing I realized was running a blog that I really wanted to make into like this big, media website is that it required a lot of technical understanding of the web and putting a website together. And I was using one of these free website makers originally, and I'm like, this is not going to work. This is not going to scale. And I didn't have the money to hire a web designer and all that stuff. It was me on my own. You know what I mean? So for the first 3 months, I literally this sounds crazy, but I taught myself to code. I had rough, understanding of HTML. I had to relearn it, the whole thing. CSS, that's front-end web design. And I was like, okay, great. But then I realized I also needed to know more than that. If I wanted to have little features on my site, click here, do this, blah, 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 I was going to need to know more than that. So I taught myself a few programming languages as my backbone. And then after about 90 days, I was already running out of money. No. I hadn't even done anything yet, right? And but I now had all the tools, and that I thought that I needed. And then I just started putting out content basically almost every single day, and communicating with who my audience was, going to where they were talking about the industry, which were at that time, I guess you could say like LinkedIn, maybe a little bit of Facebook, and also in person. I would go to a ton of trade shows that were not dedicated to the area of finance that I was writing about, but that were related to it, hoping to capture the people that were also interested in that area of finance. And so it took a little while to get there. And I was making like peanuts in the beginning, right? And I had to look at it as not a way to pay my own bills, but how do I grow this to be an actual business itself? And I think a lot of entrepreneurs get caught up in, how do I turn this into something I can live off of? When you do that, you end up becoming a sole proprietorship. You know what I mean? And you can have a nice living doing that. Working for yourself, it creates all these, benefits, create your own schedule, supposedly lack of stress, although I don't know how any sole prop really, like individual business owner doesn't have a life of stress. It's stressful running your own business, even if it's just you. But I didn't want it to just be me. I wasn't looking for a work from home job where it's just me and I have this, nice, lifestyle working for myself. I wanted to build something.
Right. Sean Murray, the coder, is something that I haven't come across yet in any of your profiles. So
I kind of downplay it, but it's extremely valuable. And I think that if you're running a web-based business, you have to know something, because otherwise you're going to be completely reliant on third parties to do your web design and to do your hosting and all this other stuff. And people who have a lot of knowledge in that field, they cost a lot of money if they're good at what they do. And if you literally know nothing, you can pay a lot more than you need to. Mm-hmm. And you can wait a long time for things to be changed, like minimal things. You're like, I just need to change this, or, add this button or whatever. It's kind of annoying to be stuck in a situation where you're like, okay, you have to fill out an engagement letter, and this person in a week from now is going to create a button for your website.
Right.
You know what I mean? And then he charges you all this money, and then the button's like, well, the button didn't really work. Now I want to try something else. Like, oh, that's another $1,000. You know what I mean? So,
you know what? I recently spoke to Erin Berry, and she is really an expert on entrepreneurship. She's followed a lot of entrepreneurs, and she mentioned to me that she had different traits that are shared between entrepreneurs, and a couple of them were number one was resourcefulness, the ability to get things done that are faster, simpler. Sometimes it requires you to learn a little bit more, similar to how you accomplished it with getting that website up. But when you don't have the money to spend on everything. And the other one is risk taking and having that attitude of self-belief, right? And faith to take that leap, even when it comes at risk. And I think just in your story, you've clearly showcased both of those, right? When you cut off that umbilical cord and went after your mission with deBanked, and also just the early days when you're hustling and scrapping to get things off the ground as quickly and easily as possible, given all your circumstances, situations. And if your wife is telling you, hey, no, you can't be spending money like hiring web developers and graphic designers, just go do it yourself.
Yep.
John, you spoke recently in one of your chats on deBanked TV. You talked about the importance of making big moves, right? And the dangers of complacency sometimes. And I think it's so true, especially within the lending and the business financing space, that salesman position or somebody who has a little bit more control over their income as a direct result of their productivity, they're probably the closest profession to somebody who's a little bit more entrepreneurial in nature. Like, can you talk about in general the importance of making those big moves, or at least having a mindset to be open to it? And what are some of the risks of not doing that?
Well, I like to think long term, and we don't know when we're going to die, right? And one of my fears is that I would have regret, things that I could have done. And I think a lot of that was stoked by people I've met along the way who were a lot older than me. And by virtue of their being a lot older, I assumed, had lived their lives to the fullest. And I came to the realization that not all of them had, because they shared that with me. A lot of them, not a lot of them, but people have kind of told me, I could have done this. And when I was your age, I had this good idea. And I heard a lot of people tell me they had this good idea that they didn't follow through. And some of it was driven by the fact that I had done something, not to pat myself on the back as having done something amazing, but there were people who said that they had the idea of what I was doing, but that they had it way before me, and that now it was kind of too late. Mm-hmm. And I just thought that, I don't want to be that person thinking, oh my goodness, you know what I mean? I could have done that, and I didn't. And reading a lot of entrepreneurial stories, some of them are stories of failure, believe it or not. They don't always end really well.
Sure.
Some of them end in failure. And once you get comfortable with the idea that things can fail, but that you tried, it's very freeing, right? I got comfortable with the idea I could try to do something big. And if it blew up, I could say, it's not like I could have, or maybe. I say I tried, and it really didn't work, but I definitely tried, right? And I could live with that. That feeds back, I think, into anybody in the business, right? Are you comfortable with what you're doing? Like if you had to look back at your life and say, what did I wish that I did, right? Why didn't you? And it's okay to fail. And one area that personally came into play was, it's one thing to turn a blog into a magazine, right? Or make a Instagram page and all that stuff. But what was really lacking in the industry that I was catering to were events. And I mentioned that earlier in our conversation. But this was something that I did not know how to put on. And I had been to a lot of, and there was a demand for it to exist. And people were actually telling me, Sean, you should do this. You should put these on. And by the way, putting on an event, it's like a huge production. There's so much that go into it. And I think a lot of people don't realize how much goes into it, or how much it costs. And I started, my biggest fear was, well, one, it was going to cost a lot of money to do, but two, this thing could really bomb because I don't know how to do this, right? but I thought that it's something that needed to exist. And I didn't want to be known as the guy who should have created a conference, but didn't because he was too afraid, right? Or felt he didn't have the experience. I actually thought, well, I'd rather try, and it didn't work, than to have not tried it. And so the first conference we put on, I didn't even sleep the whole night before. Like I pulled it all night. I was up for like 36 hours straight. I was super nervous. And we had been pretty well prepared, but a lot of things were going wrong. And it had the potential to not go the way that I wanted. In fact, I was supposed to have this whole speech prepared, and I never got around to it. And I had to speak to 400 or 500 people with no speech. They put my notes in a teleprompter, which wasn't helpful at all, because I was just literally reading, like sentence fragments.
Sure.
And I was like, oh, and I was like, don't look at that, do this. And but you know what? It went okay. And after that, people were like, this was great. When's the next one?
Mm-hmm.
And I was like, we did it.
Yeah.
It worked. You know what I mean? And now look at us. And so in 2019, we actually did 4 events. So we went from just doing that one event where I was so nervous, so afraid, to doing 4 in 2019. We actually did one up in Toronto, right?
Mm-hmm.
We'll be back up there in 2022. But it's all about being bold. There's nothing wrong with failing. I think some people are afraid, or they think that there's some shame. And some of it might come from family pressure. Sometimes, you grow up in an environment where your family tells you to be happy with having a job and a salary. Don't rock the boat. Don't go off and do anything crazy. You know what I mean? Just put your head down, earn your money, get a house, whatever. And they almost want you to fail if you go off and do something bold, so that you return to the normal life that they want for you. And that kind of adds additional pressure, because imagine people almost rooting for you to fail, right?
Mm-hmm.
And you might even have friends who you think are your friends who are just waiting to say, I told you so. I told you that wasn't going to work, right? And you just have to block all of that out and just not care. And, I got to, I started to say, my life is about me and about what I regret or what I enjoy doing. And if I fail at something, I'm not going to feel embarrassed. I'm going to feel disappointed in myself for not having succeeded, but I'm not going to be embarrassed. And if someone tells me, aha, you failed, I'm just going to say, so what? I tried and you didn't.
Exactly.
Right? And so that's what it's all about. Being bold, not being afraid.
Well, I think like how people react to your successes or failures, whether they're big or small, it says a lot about them as well, because a lot of times if people are, if they lack action or motivation or making some of those moves that require a lot of effort, then they need to justify their lack of action by having people around them not get out of that bucket, right? Mm-hmm. So they want them to stay there at their level because it makes them feel more comfortable. And as soon as somebody is doing something that is breaking them out of that bubble, they become very uncomfortable, and they're basically not happy for those successes. So it's a great way to weed out people that you probably don't want to be in your circle, that probably you don't want them to be in your circle, rather, right? Just to see, as soon as you start being a little bit more active, it really comes to the surface.
Yeah. So, and one piece of advice I would give on that is, don't get ahead of yourself with your own successes, because if you start giving the appearance of success too soon,
right,
and you start creating this image, that you feel you need to live up to. If you're like, yeah, I'm the #1 CEO, all that stuff on social media, and then the next month your sales are way down and you're like hiding, right? And then you feel you need to live up to this image that you've created, right? So don't get ahead of yourself, and don't even make it about the image. I think people are quick to turn any early success, not a lot of people, but there are people who turn early levels of success into the appearances of success, and they turn it into them driving a Ferrari or something on Instagram. Look at me and my startup, and that can be so detrimental early on. Entrepreneurship is like this. ups and downs. You know what I mean? It's like the highs and lows. It's never a straight right up. And so then when you start telling the world, I'm this big, this big shot who drives around in Ferrari because I had an awesome month, and then next month you can barely make payroll. You kind of create the situations where people are saying, I told you so. You know what I mean? So don't get ahead of yourselves in any of your successes. It's okay to be happy in your high moments, and it's okay to feel down in your down moments. But if you create, this image that you have to live up to, it just makes it all the more worse.
And you're gonna look like an asshole. Like who wants to go on social media and just watch you drive around in a Ferrari? Like, you know what?
Yeah.
I can be genuinely happy for your accomplishments, let's say as a publisher of deBanked, and I'm like, oh, you know what? Shamar is just such a great guy. He's humble. He's done a great job with his business. But as soon as you start posting up pictures of you in a Ferrari on a daily basis, just rolling through the streets, pumping songs, I'm going to be like, is that necessary, Sean?
Yeah.
Just keep that stuff on the down low.
Yeah. Yeah.
Right.
Exactly. Right. Because you're like, well, what's Sean's going to be like when his business isn't doing so good, right? Is he going to be, driving around in like a 1970s Honda or something, right? And you don't want to create this image you have to live up to.
And partially because now it's easier than ever to do that, because you have the ability to just with a few clicks of a button basically broadcast to the world or to a much larger community. So a lot of people, I think, sometimes unintentionally fall into that trap, right? Because there are psychological factors that impact our behavior that sometimes we don't even understand. And it can start relatively innocently early on, and you're just trying to maybe promote your brand or like promote your business a little bit, but then it can spiral out of control as well, right? And today, the power of social media, you can broadcast messages so easily that you have to really watch it. In fact, in the 1920s, your great uncle was one of the best known movie stars. And now 100 years later, you have a publication that has its own TV channel. Do you sometimes think of your work as almost kind of paying tribute or manifesting the creative, artistic background of your family?
No one's ever brought that up. I think I mentioned that on Instagram, didn't I? Right? Yeah. So my great uncle James Murray was, for a period of time, one of the most famous Hollywood actors in the world. And he started in the silent film era. And he was a relatively unknown actor in the beginning who got a big role in a film called The Crowd. Mm-hmm. Came out in the year 1928. And it turned him into this huge success. And he was in demand for like every single movie. And he went from this so weird to be talking about, but he went from the silent film era into the what's known as the talkie era, where they actually had words and sounds and music. And it's very, very strange. I've seen some of his movies, not every single one, but I've seen some of his movies, and I've read a lot about him, people he worked with and stuff like that, family members. It's an interesting thing to try to get into his character, right? And if there's any semblance of that in me, right? We're talking about a great uncle. Right. It's close, but not like, it's not like my brother. You know what I mean?
Did anybody else in your family, was anybody else involved in show business?
So his brother, so my other great uncle was named Harry, and he was I don't know if you would call him famous, but he was a Broadway star. He was in a group called the Debonaires, and he danced on Broadway for a long time. And their father, my great grandfather, was actually a freelance writer, and did that for like 40 years. So you have this this writing background, right, that goes all the way back into the family, and then you sort of have this this Hollywood media creative side of the family. And I don't know that I would say paying tribute, because when I started all this, I didn't really know all of that. I really only kind of came to learn more about it and appreciate it just in the last few years. And I did start to see some of the similarities in our lives. It's interesting to have kind of gone through a life progression and then later learn that you had relatives ancestors that kind of did the same thing.
Mm-hmm.
It's kind of freaky. And
it makes sense a little bit as well, right?
It makes sense because you're like, why am I like the way that I am, right?
Yeah.
And both of those great uncles, they dropped out of high school to do what they wanted to do, right? So they were very passionate and they were risk takers.
And they made bold moves.
And they made bold moves. And they grew up in a household where an education was very, very valuable. They felt very strongly in their abilities.
Mm-hmm.
And it paid dividends. One of them became one of the most famous movie stars in the world, right? He hitchhiked from New York City all the way to Hollywood. He was an extra on, a production, and a famous director was like, that guy has the look I've been looking for. And that's how he landed his big role. You know what I mean? So if he hadn't done that, and he was sleeping on people's couches, right? He didn't have any type of stable work, and look how it worked out for him.
Incredible. I think there's absolutely a relation, and it's kind of manifest. And like you said, you don't always know your background until suddenly it's like, okay, you're starting to connect the dots a little bit, right? So I think that's totally cool. And one of the most recent interviews you guys actually did on deBanked was with the mayor of Miami, right? It was with the Miami mayor. Mm-hmm. And in my opinion, that's a really cool guest to have. Where does that rank among some of your most memorable guests that you've had on deBanked?
Probably the top person we've had from a video perspective. I never thought about how to rank our guests, right? And we've conducted a lot of interviews, both in person and over the phone. In fact, when we did a virtual conference in June of 2020, we had someone from the Federal Trade Commission, which is the big marketing regulator in the US, come and speak. Mm-hmm. And so we've had people from different areas of government either talk to us for a story that we published in our magazine or speak at our show. But that was the first in-person video interview we did with any member of government. So he's probably the top person we've had so far. But I think as the COVID era ends and we're able to do more interviews in person. By the way, it's hard to do video in person. Right now, we're not in person, right? So it's hard to do in-person video interviews during this period of time. He was very accommodating and open to it. Obviously, you might have seen from the video that they had to wear masks, right? It was a masked up video. But we will do more, and we will have, I think, guests of that caliber, and hopefully, even beyond as time goes on.
If you could interview anybody and you could pick 3 people to be interviewed by deBanked, who would they be?
Yeah, that's a good question. We actually have access to a lot of individuals, and so we've been blessed with the access. And part of that is because our reporting has been so well researched and proofread and edited for a long period of time. If it's a subject in which the interviewee is eager to speak about, they can review our past content and see that we're probably a really good source to voice whatever it is they have to say. And so, I mentioned we've had members of government before. We've had CEOs of major companies before. I think even a few publicly traded ones. But there are people that have been a little bit out of our reach that I would like to speak to. Off the top of my head, I would really like to speak to be honest with you, Elon Musk. I think he's one of the most interesting people of our generation.
Incredible.
He's unlike any other entrepreneur out there because he's thinking the boldest, like the most far reaching. And he's also at the same time the most grounded. If you follow him on social media, he likes to mess around, which makes him even more interesting, right? Number 2 for me would probably be, there's this TV show on CNBC called The Prophet, and the guy he's the CEO of a company called Camping World in the US, and his name is Marcus Lemonis. He also had a retail store empire, and I've been watching his show for years, and it's interesting because he's an entrepreneur that helps entrepreneurs. And he's able to tackle basically any type of business problem no matter what the business type is or what the situation is. And so I would love to, I think we've tried to get him before and it hasn't worked out, but he would be on my top 3.
Awesome. Dude, I mean, Elon Musk to me is just a standout. I think that it's so interesting. I watched a lot of his stuff on the internet, and his responses to some of the questions that people ask him are just out of this world. There was a really cool debate that he had with Jack Ma, the Alibaba guy. And it was just a debate between the two of them, and they talked about things like AI and, jobs and space and things like that. And incredible. It's like 40 minutes long. If you haven't seen it, I definitely recommend to check it out.
Sure. Yeah, I'm going to. I read his biography, but that was years ago, and I feel like his personality and character has come through even more just in the more recent years, especially with his cryptocurrency, the cryptocurrency side of him, his belief that we're all living in a simulation is something that I think about. Honestly, I think about it all the time, and I think about it more than I normally would because he believes in it and he thinks it's probable. And so
he's not the only one. Like, there's a lot of people supporting this theory.
And he's one of the smartest people I think exist in the world. And so if he's come around to the belief that it's probable, then I'm like, he might be right.
Yeah. Dude.
And that's why you need to be bold, because if we're all living in a simulation, why not take the chance, right? If this is your simulation, then just do whatever the heck you want. That's exactly how I look at it.
Sean, you mentioned cryptocurrency. In 2015, an advertiser paid you 14 Bitcoin to advertise for 1 month on deBanked. Now, this is 2015. So at that time, the price of Bitcoin was somewhere between $200 and $400, probably worked out to about $5,000. Today, it would be worth, if you were to hold it, it would be worth about $750,000. If somebody, now we're not going to dwell on the past decisions, right? If somebody gave you 1 Bitcoin today to pay for a month of advertising, your site has grown quite a bit, about $50,000. What would you do with that 1 Bitcoin? Would you cash it out or would you hold it?
You had to bring that up, huh? It's the painful moment of I had 14 Bitcoin. That was just for one transaction. I've had more Bitcoin over a longer period of time, but that was just one deal that we made. It was 14 Bitcoin, and we priced the contract in Bitcoin because I'm like, well, if you believe in Bitcoin, you don't price it in dollars and then try to figure out the Bitcoin equivalent. We priced it in Bitcoin, so it was 14 Bitcoin is actually in the contract. This is in like 2014, right? That was an unheard of deal. But I was looking at it. The price risk was minimal. It goes up $10, it goes down $10. What's the difference?
Right.
But I actually don't have regret in that regard because I never looked at Bitcoin as a speculative investment. I looked at it as a payment mechanism that was free from government control. And I haven't changed my opinion of it. People are asking me now, have you changed your mind now that Bitcoin is like, $55,000, $60,000, whatever? And no, I don't. I haven't changed my mind. So if someone paid me in 1 Bitcoin now, which is the equivalent of 55, 60K, I would hold it till it wasn't practical to hold it anymore.
Yeah.
If I needed it, if I need the money for cash flow, and that large of a sum, I probably would need for cash flow because whatever service I was providing probably cost me out of pocket expense, right? It wouldn't be purely profit, whatever it is we were offering. And so I guess I would hold it till it was until it was practical to do so, and then I would sell it off. I'm a risk taker, but I'm not a gambler. I like having control over the outcome. And so the thought of holding something to just hope it goes up, where I have no control over that, doesn't make sense to me. It's not my type of risk. And the whole notion of becoming like a millionaire because you held something that went up, it takes all the fun out of the journey. You know what I mean? I want to make millions by building something that's sustainable and can continue to make something and be proud of what I built, rather than I held something and I was right and now I'm rich. And the odds are it's never going to work out that way. So it's why when I go into a casino, I don't gamble. I mean, I might sit there just for the fun, have the drink and do the socializing. But I'm never the guy going into the casino thinking I'm going to turn, this $100 into 100,000.
You're not trying to earn money there, right? You really come there to spend money on entertainment.
I'm there to have a good time. But for me, I don't even play the lotto. I feel like if I won the lotto, it would cheapen the win. Like, it's $50 million or whatever the lottery is, the jackpot is. But I would feel like I would rather have earned it than to have just gotten it.
Well, you're right. I mean, it's a fun story, right? To kind of talk about fun for other people maybe from the side. I mean, listen, the guy on the other side also gave away 14 Bitcoin, not knowing what it was going to be worth down the line.
That's true. I'm sure he has. Yeah,
exactly. But to your point, like it has to be the sustainability is a big key, right? That's why people that win lotteries 5 years down the line, majority of them are in the same or worse financial situation than they were before they won, because the influx of cash is not really the solution. It's the sustainability of generating income and living life and making the smart financial decisions along the way in life and in business that create sustainable wealth, right? So can't dwell on it. Just have to talk about it and laugh, right? That's the only thing we can really do.
And to your point, if I had, let's say, won $50 million in the lotto in 2010 when I was just starting a blog, I would have very poorly managed it. I wouldn't have known how to manage it. And all this life experience I've gotten by growing and developing a business and managing, larger and larger sums of money have made me a lot better prepared to manage something like that. So if I were to come into $50 million now, which would be awesome, right? I'm confident that I would not, destroy my life and, go bankrupt and all that other stuff. I feel like I have the knowledge and the tools and resources and relationships that would allow me to effectively put it to work and at the same time, live comfortably. And I would probably continue working and I would come up with my next idea, to be honest with you.
You'd be better equipped to manage that money now than you were before. And the reason you gained that skill set is because you didn't have that early on, and you were
That's exactly right.
You were forced to learn things, how to go about it. Sean, I want to talk about the industry a little bit. So when I look at some of the headlines around what's happening in the alternative lending space and then business financing in general, I see a lot of headlines with the tech giants, right, that are dominating the conversation. So guys like the PayPals, the Shopifys, the Square, companies like that have massive captive audiences, that have access to a huge amount of businesses that are using their platforms for a variety of reasons. They have an abundance of data. Can you talk about what you're seeing in terms of trends in the financial space and how that landscape is changing with these big giants coming into the game? And what does that mean for the smaller lenders and funders?
Well, it's been interesting to watch, mainly because I started watching it when I was working in it back in 2006. And back then it was just, it was banks. And then there was a handful of non-bank business lenders. And that was it. That was around the time that peer-to-peer lending and the consumer side was just starting to come out too. But that wasn't this huge, big thing yet. And what's interesting about the evolution is that things kind of go back to the way that they were. In the consumer lending space, what we've seen is that peer-to-peer in the United States, peer-to-peer lending has kind of came and went. And it's now back in the banks. The banks are really doing the online lending now for the most part. It's almost like predictable in a way, right? Because the banks see what the online lenders are doing, and they see it as they're like, oh, we could be doing that. And it just takes them a really, 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 really long time to catch up.
But are the banks lending to the same demographic as the non-bank lenders of the past? Or are they just using technology, but they're still serving that higher prime type of customer?
Yeah, so that's a good point. So banks are still serving the higher, prime customer for sure. And you still have the subprime and mid-prime customer that is still underserved. The downside is that peer-to-peer lending, as it existed before, isn't really there to help them. And so you have alternative lenders who are filling that gap. They're just not peer-to-peer based. They're not as unique in the way of how they operate because a lot of them have to have a relationship with the bank or they have to have some sort of bank charter or something. Yeah, but you typically see the banks only working with the prime bracket, and they use technology to do that. Now, on the business lending side, so it's just a whole different ball game over there, and that's really been the area of focus that we've had at deBanked for a long time is the business-to-business finance side. And it's so much different over there because it can't be as easily commoditized. In consumer lending, you can look at somebody's income, you can look at their credit score, and you can look at a couple other demographics that are readily accessible, and you can make a credit decision really quickly without ever needing to speak to them. You can basically just say, statistically, these are the odds that they're going to pay back. That's how the whole FICO scoring system even works, right? But on the business lending side, it's not that easy. You can't look at somebody's credit score and say, this is how a business is going to perform. It might be reflective of the owner, but it's not reflective of the sales or the future of the business. And then if you have multiple owners of the business, then it becomes even less important. And so you had these alternative non-bank business lenders from the beginning saying, we're going to fill the gaps. The banks don't know how to underwrite these types, and they don't really want to lend to them because it costs a lot of money to figure it all out. And it can be too cost prohibitive to do a loan under, like, let's say 100,000 or even under $1 million, because they need to figure out who the owners are, what are they like, what's this business like, let me see their past tax filings, let me see their profit and loss statement. And not every business is reporting a profit because a lot of them are reinvesting their income to grow. But if you're a bank, banks look at that as a bad thing. They're like, oh, you're not profitable, right? And so you had all these small business lenders filling the gap. And it was really primarily driven by individuals, brokers who would find businesses who needed money that banks weren't serving. And they would do this by cold calling them, direct mail, and being found on Google search. Well, now you have these tech companies that say, well, we have access to a lot of business owners. We do their payments. We do their point of sale. We do their payroll. Might these people be interested in this type of financing too? And it turns out a lot of them were. And some surprise I've had over these years is watching some companies not realize the scalability of non-lending platforms to turn into lending platforms. Like a payments company turning into a lending company for me was an obvious outcome. But some pure lenders didn't see it. And you got companies like Square, you know what I mean? PayPal. Now we got Stripe. All these companies turned into massive lending companies. And now I think what's challenging for the non-payments companies, the non-tech companies, is that they don't have that scalability. And they're forced to acquire customers with a real cost. Whereas if you're a payments company or a payroll company, your cost of acquisition for a lending customer is nothing. You have a cost of acquisition, but it's for your primary business, and the lending cost acquisition is nothing. If you're a pure lending company or funding company, whatever it is, you have this enormous cost of acquisition, for that one type of product that you offer. That's a huge disadvantage. And so these companies have scaled really quickly. And I think it's, especially with COVID, it's really highlighted the disparity between what a tech company can achieve in lending versus a non-scalable, non-tech company.
So where do we go from here? I mean, what happens next?
The small business lenders who have kind of missed, the surge have got to figure out a way to relate to those customers on a one-to-one basis to continue to earn their business. Perhaps we're going to have the same issue that we had in consumer lending, and to an extent we are having it, in that the scalable tech companies, they don't like to take enormous risks because they need to do things that scale. And so it's easy for them to count out the mid-prime and the subprime customers and focus on the prime. Although it's not entirely that way. They will take more risk than a bank will take, but they won't take a lot of risk. And so you still have this whole area where the non-tech companies can service the mid-prime and the subprime customers. But the problem is, over time, these tech companies could figure out a way to serve those lower tier customers, and you don't want to get too complacent.
Right.
They need to figure out a way to compete with that. And maybe that's by being human. Maybe customers will come to appreciate the human element and human touch of the sales process. Or maybe that's by finding out a way to be integrated into these tech solutions. So that if you're let's say a business owner and you're using Square to do your point of sale, and there's a button to get you pre-approved, maybe Square can't do it. But it would be really nice if there was a backup plan where Square works with a third party that could do it. It's good for the Square customer that still got serviced. It's good for Square because they retained the customer and looked like a hero, but they didn't have to take the risk, and they could farm it out to another company who they could handle. So part of it is you need to think about how to live in that world of tech, even if you're not a tech company.
So one way or the other, it will require some innovation to not only sustain, but like thrive in this environment, because the tech companies are not going to be slowing down anytime soon. So the business lenders that are not in that space, then they need to get very active and in some cases potentially reinvent themselves to sustain their growth, right? And keep serving a pool of customers that can justify running an operation, running a business, hiring people and scaling and things like that.
Yeah, and I think a lot of these companies get stuck and think that technology is a CRM. And I'm not talking about a CRM. That's not tech. That's something you should have by default. So if you're like, oh, we have a CRM, we're a tech company now. You're not a tech company. You're a company, right? The tech company is the next step. If you can get a relationship with a tech company, some sort of integration, something like that, an API back and forth. Now you're talking. So I think people think, they don't think, far enough along the line. Tech is not the CRM. That's a given. You have to have that. Now you need to think one step beyond that.
Yeah, and find new places, new gaps that are missing, still missing for that consumer. And I love the comment about a CRM. It's like if I'm going to say that I have an AI-enabled software here, but really all I have is I've set up a MailChimp account with two emails that go out and somebody fills out a form. Not a tech company. It was Cabbage who was making fun of other tech companies like 4 or 5 years ago. And they said that a lot of tech companies were kind of faking it because they had a really nice website and they had a form. But behind the scenes was a lot of people working really fast manually while they were going out and saying fintech. And they're like, that's not fintech. Having a website isn't the tech. You know what I mean? There has to be more beyond the beautiful website. And so Cabbage got acquired by American Express. And so if you want to get acquired by American Express, you have to have more than just a website and a CRM. Absolutely. What's happening on the supply and demand side? I mean, there's some similarities between US and Canada in how merchants and lenders have responded to the pandemic, right? In 2020. So at least in Canada, what happened is the initial aftershock was lenders really contracting. Nobody was putting money out there because there was so much uncertainty within those industries that traditionally were the bread and butter industries, like restaurants, retail stores, salons. On the merchant side, demand has also shrunk because there were now government subsidies, and we here had initially a $40,000 government loan that could be taken out with some forgiveness, and then that got extended by an extra $20,000. So that typical sweet spot of a business loan, which is somewhere between $30K, $50K, it was satisfied for a lot of the merchants that were needed that extra capital with free money from the government, essentially. So it took a number of months for things to rebalance a little bit. And now the supply is coming back up where lenders are lending money as well. Although a lot of lenders have reinvented themselves too. They've changed their credit boxes. They said, now we're going after e-commerce businesses. Now we're serving home-based businesses and freelancers, which was not the situation before. And then on the merchant side is the same thing. People are starting more businesses that are in those categories. The government subsidies are running a little bit dry. So the demand has picked up as well. Can you see on your side what is happening with the supply and demand side? And where do you foresee that moving in 2021. And specifically, I heard you recently talk about the concept called the Roaring Twenties. Can you expand a little bit on that and what that means?
Yeah. So I'll first start off by addressing that we had a very similar circumstance in the US in which the government essentially gave out free business loans. For us, it was called PPP. And they're right now doing the second or third round of it. And so there were companies that got it in the spring and the summer, and they're right now just finishing the last round. Companies are getting more free money. Now, it has to be used essentially for payroll or part of it for rent. So it has a specific purpose. So this isn't like, hey, I take this money and I go use it for my normal operating expenses, or I write myself a fat check and go on vacation. So it had the purpose if it's going to be forgivable. But it did dampen demand drastically, because if you're trying to sell your fintech loan and the alternative is free money from the government, which in the normal world would never exist. You would normally tell a customer it's a scam.
Right.
You know what I mean? That's not a real thing. Don't get fooled. But that was really happening. And so customers are saying, well, I don't really need this because I'm getting free money from the government. And so yeah, demand for business loans and cash advances and factoring and all this stuff, it went down. And then it started to come back up as people spent the money. And we're now in that period where they're doing another round of PPP. So demand has gone back down again. Mm-hmm. But people spend that money. I think what's interesting is that new entrants to the alternative lending space is that there's this learning curve. And they think that if they give the longest term loan with the cheapest rate, that customer is going to be the most satisfied customer and only going to use their product, right? They're like, hey, other companies are giving these businesses 6-month loans. We're going to give them a 5-year loan, right? And that will solve all their problems. And what they don't realize, and they soon learn, is that after 6 months of that 5-year loan, those people need more money. Because guess what? It takes 5 years to pay it back, but it doesn't take 5 years for them to spend it. They're spending that money right away on whatever the purpose was. And so then they have additional capital needs, right? And so it's the same thing here, where people are getting their PPP money and whatever money they're getting, and they're spending it. And then guess what? They're going to need more capital. And so we're going to have the exact same situation where the demand for loans is going to come right back. And you mentioned, the Roaring Twenties and what that is all about. Well, being here in New York City, the local economy has been devastated. The amount of restaurants who are like a year behind on their rent, the amount of businesses that have shut down, it's horrible to see. You don't like to walk down the street and see every business boarded up, but a lot of them are like that. And it's going to create this gold rush and this frenzy to transform it when all this is over. There's been all these predictions that places like New York are going to be a ghost town and no one's ever going to want to live there. I don't know where these people are from that come up with these ideas. You know what I mean? But that's not how it's going to be at all. The demand to come back here is going to be immense. And in order to do all this stuff, businesses are going to need money, right? They're going to need to recover. They're going to need to pay rent. They're going to need to buy inventory to start selling again. They're going to need to hire. They're going to need to do marketing. And they're going to be competing against everybody else who's trying to do the same thing, right? And so you're going to have this huge demand for capital. It's going to be like years worth, right? And I truly think it's going to be this like spending frenzy and borrowing frenzy that's going to last years as local economies really try to build themselves back.
I hope so. I hope that that's definitely the approach and we get everything under control and people are back to spending and everybody is, back to doing events. I mean, that time when you threw that event here in Toronto, I loved it, man. It was the most memorable event that I've personally ever been to, because we didn't have anything like this until deBanked rolled into town. There's this industry here that lags a little bit behind some of the other countries like US or UK, perhaps. I'm talking about the alternative lending industry. really is kind of fusing now, become the lending industry. But I would love for that stuff to come back. I can't wait for you guys to be back in Toronto.
Yeah, well, we had a great time there, and you also put on a small gathering yourself that we really enjoyed too. So we look forward to being back up with you there again.
For sure, man. And I want to talk about. I want to talk a little. That was a fun time. I'm remembering it now. It was definitely a fun time. Well, I hope to do that again soon. Sean, I want to talk about marketing a little bit because your platform is an amazing marketing platform and source for lenders, for funders, for people that want to get their name out there in that industry. You deal with a lot of different funders and lenders, right? Can you talk a little bit about how would you go about marketing a financial brand, right? If you're a lender or a funder, what advice would you give them, and how can they leverage a publishing platform like yours for marketing purposes?
So that's a very good question. And one thing that I have learned in doing this for a long time now is that a lot of the fintech companies are great with their financial services end of things and not so great with their marketing end of things. I think there's a lot of, at this point, if you build it, they will come attitude.
Right.
And there's a lot of competition out there, and it's not that easy. It's actually very, very hard. I mentioned something about cost of acquisition before. Cost of acquisition for, say, like a lending customer, very high. And so there's a lot of room for improvement out there. And I think some people get caught up in the idea of, we'll have an Instagram, we'll have a Facebook, done. What more do we need to do?
Mm-hmm.
And there's just a whole lot more. Some of it goes into maximizing the conversions of the people you do actually interact with. And that means that if somebody is viewing your stuff, that you have a way to guide them along to where you want them to filling out a form or calling you or sending you an email so that you can provide them the service that you want. Because if you just look pretty on Facebook, but there's no call to action to do something with you, I don't know what's going to come of the interaction. And so you need to maximize the convertibility of every potential customer interaction, and that will reduce your acquisition cost. That's certainly one area that I would highly recommend. Also, people put a high value on trust. And one of the first things that somebody is going to do before they work with you is they're going to look you up on everything. I think we all know that, you need to be found on Google or Bing or whatever, but they're probably going to do, one step more than that. They're going to look for your Yelp or your Trustpilot or your Google reviews and all that stuff. They are going to look at your social media because they want to see what kind of person you are or what kind of company you are. They want to see if anyone else has had any problems with you. They want to see how you conduct yourself online.
Right.
And you need to create a digital footprint for yourself, and you need to embed yourself with credible organizations. Yeah. And that might mean joining a trade association, right, to offer some level of credibility. It could mean getting some sort of certification. You need to show that you're part of the ecosystem that you're in. You can't live in an isolated bubble away from the market that you cater to because it looks weird, right? I think it's also important to create a name that's memorable. And I see a lot, and not to criticize any of them, but there is an overabundance of companies that choose essentially the same name. Mm-hmm. It's the same three words in different order. They all have finance, capital, whatever in them, and then they wonder why customers don't remember them. And it's because it's impossible to remember you because your name is like every other company out there. But at the same time, you don't want to go too far off the rails. Where if a customer is contacted by you and your name is like spaghetti with meatballs, and we're a lending company, they're gonna be like, what? That's too far off, right? So, you got to put a lot of thought into your name. And one thing that we try to do is we do try to help companies convert the customers that are potentially looking at them. And so if you come onto, I don't want to, I'm not here to self-promote myself or our company or anything, but if you come onto our website, we do have a ton of information. And so if you're an advertiser on the site, it's noted. It's through the sponsor tab. And we have a directory just for funding companies where you can go and check out all the funding companies and lending companies that are advertising with us. But there's also another link where you can say, read more. And that will pull up anytime they've ever been mentioned on our website, good or bad. People don't pay us to write articles about them. So there's a risk that, that mention might not be the best. But at the same time, I think it's also important for people to realize that everything about you on the internet just doesn't have to be good. Mm-hmm. It's actually better for there to just be a lot about you on the internet than there to be almost nothing and that very little piece of information be good. People expect there to be bad experiences and they want to see those. And then they want to see the good too and say, well, some people had bad, this many people had good. It looks like a real business.
Right.
You know what I mean? They're out there and they can be held accountable because if they have a bad experience, people are voicing it online. But it also looks like there's good stuff too. And when there's nothing, that's a red flag. And so I advise anybody to get as much out there about yourself as you possibly can.
Absolutely. And I think the publishing style websites, they provide a very unique opportunity because one mistake that I see a lot of marketing managers at sometimes very large financial brands make is that everything is approached from an advertising point of view. It's like, how do we post our banner on this website? And how do we put our ad on this website? But the unique benefit and feature of a publishing style website is not the fact that you can slap a banner on it, is the fact that it gives you an opportunity to actually present value driving information or material to your target audience that has already been congregated by that particular publisher. And that's a huge benefit that is overlooked. So if I'm a funder, let's say coming to deBanked, instead of saying, hey, just here's 0.1 of a Bitcoin, can you put my banner on somewhere? I would be more interested in saying, listen, I know that business owners are concerned about these 3 topics. I'd like to talk about these 3 topics and not even mention the fact that we offer business financing, but I just want business owners that come to your website to read it and then eventually connect the dots that, hey, who's providing this information? Oh yeah, it's this person from ABC Capital or something like that, right? So I think that's a very unique way to approach marketing in a new age from a content, from a value driving point of view, as opposed to spray and pray kind of marketing and banner ads.
Yeah, we do get a lot of feedback from sources we've interviewed for stories that say they get a lot of feedback from their commentary in a story. And, they were kind of surprised by it. But I said, well, people are reading it because they know it's not paid for. And, your quotes are your quotes, but we ultimately had the editorial discretion to format the story. And it's content that is independent, right? I like to consider us trustworthy and authoritative. People want to interact with the sources in the stories, whether they agreed or disagreed with what they said. And don't be afraid if someone's going to disagree with you, right? That's a good thing. If someone disagrees with you and they reach out to you, wow, that's somebody who might actually be working with you now because now you're talking. You know what I mean? And they respect you enough and they cared about what you said enough to reach out to you. That's amazing, right? That's something, that you should see as a pathway to driving in new relationships.
It's a whole different way to interact. And that's why video is so important as well, because you mentioned trust building before. See something about seeing a person's face, hearing them speak, presents and gives you a sense of understanding of that person that's much stronger compared to just reading a piece of information about them or even reading a customer review. So video is a big deal these days. So I'm really happy you guys are on top of that, in the industry. That's one of the really unique things you guys have, is that you've evolved over the years and now you are at that forefront of using, not just providing marketing for your partners and some of the people that invest into deBanked, but also doing your own marketing, right? You're in that unique spot where your marketing lens is very wide, because on one side you have partners that want to market themselves through you, but on the other side you have to also market yourself to them and also to your end readers a lot of times, right? So how do you feel about being a marketer? Like, are you making all those decisions, or do you have marketers on your team that help you?
So I'm the only dedicated marketer in the company, but I rely on the feedback of everybody who works here, because sometimes I have what I think is a good idea, and I learn from everybody else here that it's not so good, right?
Right.
Or they tell me ways to improve it. And so I'm all about getting feedback from other people. I mean, I still like to drive the overall agenda forward, but in terms of how to implement something, I definitely look for feedback all the time. And when you're an entrepreneur, you can never stop. If you're bold, you unfortunately can't just be bold once and then it's over, because the problem is somebody else is going to be bold after you. They're going to see what you did, and then they're going to try to one up you. That's just the way it is. And so every day when I come in here, I think about what someone else could do to one up what we're doing, and how do we do that first?
Right.
To be honest with you, it's a state of paranoia all the time, because I'm not in my 20s anymore, right? And there could be someone like me who is looking at what we're doing.
Oh, yeah.
And I think just staying in magazines and just having a blog was something that someone could look to target and replace. And, video is a natural medium to go and do that. And so I wanted to be one of the first to really, really take advantage of this medium, constantly be bold, so that I don't ultimately end up the person that said, well, I was really good, but then I got complacent, and that could have been me. And someone came around and replaced me.
There is another medium that used to be and still is extremely popular. And it kind of brings me back to my early teen years. I was really big into computer games. I was playing a lot. And the internet was a little bit of a different space at that time. This was maybe...
What computer games did you play?
Oh, I used to love like role-playing games.
Okay.
I'll name a few, like Heroes of Might and Magic.
Okay.
Some people I know, they're the geek RPG type of games. I had a few shooters as well, like Counter-Strike and things like that, but those came later. That's not really how I got into the game. I love the fantasy worlds, the knights and dragons and castles and all that kind of stuff.
What about Warcraft?
Oh, yeah, I grew up on Warcraft. The original Warcraft, and the strategy games are right.
The original, yeah.
Like my game was Warcraft 1, not even Warcraft 2. Like Warcraft 1.
Okay, I played some Warcraft 1, but my big game was Warcraft 2.
Warcraft 2 it's like I played Warcraft 1 after I played Warcraft 2, right? So
okay,
it was huge. It was on a computer game, and like you have the orcs and the humans. It just blew my mind, right? So I was huge into that stuff, and as I grew a little bit, I was probably 10, 11-year-old when I was playing those games. When I got a little bit older, I got on the internet. I discovered these gaming forums, and there were a couple of there that were really my favorites. And I used to go there every single day, and I would post messages and I would respond. And eventually, the group of guys that I would play with online a lot, we created a clan, right? Like a group, and we created our own forum, and we would just go there every day. And that was our home base, right? It was our spot. Everybody was super engaged. You would make a post, and then we just wait for people to respond. It was an amazing feeling. And now fast forward like 15, 20 years, you have the Reddits of the world and things like that. But the forum culture is definitely not where it used to be, because people are just consuming information in different ways. Which brings me to my question, which has to do with, of course, Daily Funder. It's a forum that you recently acquired. However, you have a longer history with it, as you were actually the managing director there for years leading up to this acquisition. Can you talk about that business, that side business that's not part of deBanked, and what role does it play in your overall marketing mix for your brand?
Sure. So we do all these things, right? We have the publishing, we have the events, we have the magazine, all that. Yes, we also have a forum. It's called dailyfunder.com. So I started that as well back in 2012. So that's what, nine years ago. And you were talking about gaming forums, right? So it was the same kind of concept. There was a forum before Daily Funder that people in the small industry I was working in went on to every day and posted on. And I was a member of it. I was a very active member. And I think it had a lot of weaknesses because no one was sure who owned it. and the moderation was kind of extreme. You can't say this, you can't do that, you can't talk about this, right? It's like, okay, all right, we're trying to do business and have fun at the same time, and it became difficult, and we didn't even know who we were answering to. And because the industry was so small, it was mainly people from the New York City area, and I was friendly in person with some of the other members on the site, and I said, let's just make our own. Anyone can make a forum, right? So I started, the Daily Funder forum. We got some of the top members to move over to our forum, and I wasn't even thinking business. You know what I mean? At the time, again, it was kind of like the blog, right?
Yeah.
This needed to exist, and it existed, and we loved it and used it, but it was just not operated in an ideal fashion. So yeah, this became part of like the ecosystem, so to speak, but almost out of this sort of independent little thing. And it became very popular with the broker community to communicate with each other. And so deBanked was all about me and some of the writers who worked for me to put information out there for people to consume. But the forum allowed people to have those communications with each other.
Right.
And it was, and it still is, a very popular online forum. It's been around forever. And so, yeah, we took it over, I guess that was just a year ago or so, right? Where we went from owning half of it to owning the whole thing. And I think there was some belief in the beginning that we were just going to fold it into deBanked. And it's something I thought about, just combine it, make it deBanked too. And I think part of the reason why we didn't do that is because the two things kind of serve independent purposes. deBanked is a brand of which we can fully control the content because it's us, and we have full editorial discretion. Whereas the Daily Funder is user-generated content, where the industry controls the conversation. Now, sure, there's moderation, when people get out of line or use profanity or something, right? But they kind of dictate what they want to talk about.
Right.
And so the plan is to keep them separate for the time being. And I do have plans for what we're going to do next with the forum. Part of that was kind of shelved because of COVID, and we focused more on let's do video with deBanked. But there's a lot of value in people communicating with each other. And I know this because we see it in our analytics. I talked about analytics earlier in our conversation. I look at my analytics every day. And I don't just mean Google Analytics, like how many visitors did we get? I care about that, but I care about things like time on site. How many pages did they look through? And if everyone looked at one page and then left, and they're all there for 10 seconds, and I had 1 million visitors, I didn't really build anything. People are spending more time on Daily Funder on average than they spend on Facebook or Instagram for a session, not cumulative for a day. But if they go to Daily Funder, they spend more time on Daily Funder in a single session than they will on Facebook or Instagram. And that's very powerful. And so I continue to think about ways that we can enhance the communication side of the industry speaking with each other without ruining it, and also thinking about how that type of conversation is going to evolve, because I don't know that the future is, like you said, an internet message board. You know what I mean? It's going to evolve. And so I come into the office every day thinking about where can we take this forum, what makes it special, and grow it to the next level, because I'm sure somebody out there is thinking a way to do that. And I want to be first.
Absolutely. I mean, user-generated content is so key in the online marketing mix. People talking to each other is a huge value add for the consumer experience. So in a way, I'm wondering why aren't more publishers or even brands doing this, creating their own message board that's controlled within their own environment to allow people to do that more?
Yeah, so it's because it's very hard, and it requires a network effect. And I was very fortunate to have started it very early,
right,
when the industry was very small and there was no place to go. And it helped greatly that I knew a lot of the original members in person.
Right.
Because these weren't anonymous people. Yeah. You knew the conversation was genuine, and you knew these were actual people, not bots, right? who knew what they were talking about, or or at least they knew the business. And so, I mean, people could look at that and say, "Oh, we'll just do a forum. We'll do a message board. We'll create a community." I think people talk about creating communities all the time.
Right. Yeah.
It's very, very,
Very
difficult because you have to have a network effect, and that is that people believe that everyone else is already on it, and that causes them to join, and it just compounds the effect of everyone else is on it, so I need to be on it too. And so I had first mover advantage in that regard, because all the brokers in the business finance space who were offering these new products really wanted to talk to other people, and guess what? There's only one place that they were, and so and so that was key. So if you're thinking out there, how do I make a community? You can't build it and they will come. It has to be true. Everyone else has to already be on it.
Well, and building community is also, it's not like it's just building its own little thing that just grows on its own. It's like building a business. It's like building a brand. You have to put dedicated strategy and effort into it and nurture it, and water your plant in order for it to grow. Otherwise, it's just going to die early on.
Yeah. And a lot of that, nurturing it, a lot of it is moderating what can be said on it, because a community can quickly die if there's nobody policing it. If people feel that somebody is using the entire community to their sole advantage, then people don't want to be part of something that's only for the benefit of somebody else, right? People know what Daily Funder exists for. It doesn't exist for my benefit. We sell ads on it, but I'm not competing with anybody on the forum. It's literally there for them to communicate with each other and say, well, what's in it for deBanked? What's in it for Sean? We sell ads on the forum, but they control everything else. And we do have to police it. And people do email me, they call me, they text me to tell me when things in the community have gone off the rails. And if it's left unaddressed, it reduces the faith in that community to be a place that people can continue to have certain discussions. And so we're not as big as Facebook or Instagram, but I sympathize with some of the decisions they have to make, because we've had to, in the past, remove some people from the platform because they were so out of control, right? And they're like, oh, free speech, freedom of speech. I'm like,
right.
It's not even about, me running a business. It's about the whole community ceases to function because of this person. You know what I mean? The whole thing breaks down. And so it's about having people who are there to really participate and foster the community, and making sure you do as much as you can to keep that environment, because it's really easy for it to not work. And not to say that I do it perfectly. Plenty of people, I'm sure, have their own feelings about how we operate it, but it has succeeded at this point for 9 years straight. I mean, I don't have the analytics open up right now, but we're getting 30, 40,000 people coming to that site every month. I don't even do any paid advertising. 30, 40,000 people are coming to that site every single month. It's powerful.
Amazing. Oh, it's incredible. I mean, freedom of speech is an interesting topic because it's, with what's happened, it's somewhat dependent on people's willingness to accept your freedom of speech as well. Because if you walk into somebody's house, sure, you're free to speak about whatever you want, but people in that house need to be willing to listen to that, right? And if they're not, then your freedom of speech goes out the window and you get out of the house. You get kicked out, right? Because there is a time and a place for you to communicate it, so to speak. So if a forum moderator decide that that's not the place for you to do that, then you got out the window. Facebook and Instagram are a little bit different. They're these global giants that everything is different for them. But regardless, I really appreciate your insight on the forum and community building. I think that's so important. Sean, the last question that I want to ask you is this. If you look at your career over the past 15, 20 years, I mean, obviously you've learned a lot. You've had a very vibrant experience. You've dealt with a lot of people. You've grown your business that's very multifaceted. You've interviewed a lot of people that have a variety of insights. You've built teams and you've led people on your journey. So if you had a chance to speak to your younger self when you were just about to embark on your professional career, given all the lessons you've learned so far, what would you tell yourself?
It depends on which younger self we were talking about, because where I was in high school and where I was in college was different. and where I was immediately after college was different than when I was in college, right? And sometimes you look back and you're almost embarrassed, well, at least me personally. Sometimes I look back and I'm almost embarrassed by my worldview and by how I thought things worked and how everyone else was doing. I assumed everyone else was a genius but me, and then I had to figure out, the secret to becoming a genius, and then it was going to become impossible. It's partially why I was reading so many books. I'm like,
Right.
how do all these people do all this stuff, right? I think that I would tell myself that it's going to be worth it, to be honest with you. I don't have any, I'm young-ish, but I don't have any regrets. I am totally happy with where I am currently. And I don't pay myself $1 million a year to work here, right? So it's being an entrepreneur doesn't mean you become mega rich. Maybe if you sell your company or you go public and all that stuff. And there could have been a path where I became this big Goldman Sachs executive in my fantasies, right? And possibly done quite as well, or who knows, perhaps even better. You know what I mean? I don't know. But I would have been thinking the whole time, what if? And it would have been very safe. And I think about if someone had asked me when I was 50, or when I become 50, what did I learn from life? And what can I teach somebody else? I feel like I wouldn't have as much to teach. I don't know that I would have I would have things to teach, but I feel like I'm a lot better prepared to tell somebody else, what can happen down the road. So I would tell myself, hey, younger self who's about to embark on this, I know you're nervous about, quitting your job and teaching yourself how to code. It sounds insane, but do it. And don't worry about it. It's worth it.
When I first started my entrepreneurial journey, I had a similar story where I basically left my job and I walked into the office with my partner, Raf, who you know as well. And my parents got me this, as a sort of good luck symbol. They got me this canister that had a key inside of it. And there was a quote on it. And it said, "Don't be afraid to fail, but be afraid of not trying." You know what I mean? So, and I think that kind of, in a way, sums up of what you said. Is that right?
Perfectly summed up. Yeah, I mean, that couldn't be any more perfect. Yeah, so you relate to and know everything that I'm talking about. And it's awesome that you had that support system, that you even had those words of encouragement, because there are people out there that don't get those, don't be afraid to fail type things. There are people who get the opposite message, and that is be afraid to fail. And that is very unfortunate. And I think there's different levels of failure in general. You don't want to fail to the point where you do something stupid, right? And you're like, oh, well, I wasn't afraid to fail. You know what I mean? And
exactly.
And now I'm homeless, right?
Yeah. You don't want to just fall in love with failing all the time. Like, there has to be a context around where you're failing as a learning journey towards success, or whatever you define success. Not just like, I'm going to do everything wrong.
Yeah. And then romanticize about how much I failed. Right. I failed. It was awesome.
Why are all these great things not happening to me? I'm messing things up left and right. Come on.
I'm not afraid. More fail. Yeah. I just want to say, if you're out there and you're getting the opposite message from people, from family, from friends, and they're saying, be afraid to fail. It's okay to be your own person, and don't live other people's lives. Live your own life and decide what you want to get out of it. And you will feel a lot better having failed and tried. It'll be a lot better to tell someone when you're 50, I tried that.
Right.
Here's what I learned. You know what I mean? Rather than, I could have tried that. Maybe it would have worked, right?
Right. It's the worst. It eats away at you too. Sean, I mean, listen, you've given us such great insights, such valuable information. I had a lot of fun. How did you find it? Did you have fun?
It was all right.
It was. We'll cut this part out.
Okay. No. I greatly enjoyed our chat. As I have, I've enjoyed all of our chats. You and I have spoken away from these video calls. we've spoken together in Toronto, and I look forward to coming back and talking with you again in person and going to your little, your shindigs, and I hope that you come to our little shindigs, and we continue to be a part of each other's journey through the industry as the years go on.
100%. And Sean, I want to really thank you on behalf of our team and all of our viewers for making the time to speak with us today. And I hope you have a fantastic rest of the day and rest of the week.
Thank you. I wish the same for you.